Well, don't sue me, but the stock market rally must end. Morning, everyone. It's Papa J Pow, also sometimes known as Meet Kevin. Today, we're going to talk about the stock market. Take a look at these rich asset valuations here as the Dow Jones futures are up 0.36%, S&P futures up 0.26%, Nasdaq futures up 0.13%, oil also up. That's not good. It means we're going to have to look at that taper coming up this week. This week, be meeting with fellow board members about that taper, and we'll have to write a prescription for reducing our bond purchases. But anyway, Brent almost at 85 again. And let's go ahead and take a look at what stocks are doing. So we've got a lot of movement here in Lucid specifically. Lucid had its delivery event this weekend. They delivered about 520 vehicles out of 1,000 vehicles that I expect to deliver this year. I was not part of that delivery event. I do have a reservation with them. Not exactly sure why I do, quite frankly. I never drive. I just print money every day. That reminds me. Yes. There we go. Much better. Okay, so anyway, I mean, valuation pretty stretchy, I'd say, over at Lucid. But then again, if you compare it to Tesla, and the valuation doesn't look that bad at all. But then again, that's what folks say about Xpeng and Lucid Xpeng and Neo as well. And you are seeing Xpeng move today. Xpeng up 4.27. Let's see though where Neo has been. They've been lagging a little bit. Yeah, look at that. Neo is actually down 3.6% in the pre-market. Neo is the one out of all the autos that's really lagging right now, down another 3.58% after having a red day on Friday as well. Outlet moving up about 6.15, Microvast 922. Matterport, look at that, another 5.44% here on Matterport on the metaverse talk. Nvidia up about 0.42%, so slightly green on Nvidia. Take a look at this. Facebook now having a little indicator here that they're going by Meta Platforms. Meta Platforms Inc. Let's see here. Somebody says Lucid delivery event was understood to be 65 cars. Oh, they mentioned that the plan was first 520, so I don't know about that. Maybe they only publicized that, but that wasn't there, so who knows. But let me see here. Lucid. Starting production with our 520 Dream Editions first. I don't know if they didn't then deliver the full 520. You might be right about that. That was at least what one of the rumors were. Maybe it's 520 Dream Editions first, and that's the goal for this year. Maybe you're right. Maybe they did deliver a smaller amount this weekend, which is even crazier that if the stock's moving off 65 deliveries. But hey, all right. So Enphase up 1.68% here in the pre-market. Etsy up 0.16. Not much of a move here. Let's look at the downside. What's going down here? So Backed Holdings was up 66%, giving back about 7% right now, going back under $40 here. Not a terrible surprise to see a little bit of a give back after a large run like that. Fun down a couple percent. DWAC down 2.5% here. Not a lot of red though. Of the red, really the ones that are pulling back, with the exception, I mean, Neo's the worst here because Backed had a crazy run. Neo didn't. But otherwise, the market is vastly green. AMD lagging a little bit here, down 0.33%. A lot of stocks flat. But otherwise, mostly green market here. And the question now is, will the stock market rally potentially end? will the stock market rally continue? Or what do we think in terms of the potential for this market to continue moving on? And I have to say, I mean, we remember September, folks. Remember the pain we had in September, and it's so important to look at that period of time, because if, for example, you weren't buying the dip, you've got to look and ask yourself why not, right? Look at the pain points that we had. The government was expected to shut down. We feared the Fed taper. We were coming up against the debt ceiling crisis. We feared the Evergrande default. And then we had multiple other sources of more modest drama, but plenty of drama events that happened in September, and all of those have really been kicked down the road or have mostly evaporated. It's expected that perhaps the next catalyst might be when all the board members at the Federal Reserve, including myself as Jay Powell, end up meeting this week that and announcing the taper this week, that maybe the market might have some jitters. But realistically, the market seems to be almost cheering the taper. And I know that sounds really odd because generally we think, okay, if interest rates go up, and we, which happens potentially sooner after a taper, you taper first, then you raise interest rates. You wouldn't do both at the same time. Then that would be potentially bearish for the stock market. But then individuals have and market participants seem to have been very excited about the potential for rates going up actually a little bit to taper or to temper inflation. And if we temper inflation, then that would be good for tech stocks. So it's almost like this bizarro land rotation we have in the stock market, and it's wonderful. It is a very nice end of the year rally, and really short. I don't believe this week's taper announcement is really going to be a negative catalyst. We do have a jobs report coming out this Friday. That'll be a catalyst. Then we have CPI data the week after. But earnings so far, pretty good. No, earnings definitely not a negative catalyst this year. And as long as we don't end up having a government shutdown towards the end of the year, which there's almost certainly going to be drama over the potential for a shutdown towards the end of the year. But aside from actually anything happening, the market rally could last. It could just continue to go. So anyway, all right. Let's see what else we have here. So Microvast. Okay, well, this is pretty stable right now. It doesn't look like we've got any large movers here beyond what we've already taken a peek at. Cardano sitting at 195, Bitcoin 61.8, Ethereum 43.46, and Doge at 27, with Sheep sitting at about 73. Okay, let's take a peek at some of the headlines that we got going on here. All right, let's see here. Okay. There we go. Okay, so let's see. Yellen dismisses Treasury market jitter, sees solid recovery. Treasuries tapering, seen outpacing Fed with $1 trillion in cuts. Powell risks return to 1960s inflation from confusing jobs market. Nope, definitely. I resent this. In the late 1960s, U.S. economic policymakers misjudged how hot they could run the jobs market without fanning inflation. Nope, not worried about it. Stand to worry, everyone. We won't have inflation. It's transitory. It's just taking longer to be transitory. That's it. So we're calling it transitory eventually. Anyway, this article references the 1960s, which basically led up to this roaring period in the 70s, in which we had essentially hyperinflation, leading to the massive rate hikes in the mid to late 70s, and the Volcker massacre, so to speak. Anyway, now some economists are wondering whether the Federal Reserve chairperson Jerome Powell, that's me, don't sue me, bro, and his colleagues are making the same mistake. Nope. They're aggressively pushing for a return to pre-pandemic labor market of half a century low joblessness despite widespread worker shortages. We could hit full employment earlier than people expect. Fed policymakers meeting this week are expected to decide to scale back. Yep, we're going to be. Or so we say. Powell acknowledged recently the risks to inflation are clearly the upside, but stuck with his base case that price pressures will eventually ebb and supply kinks, as supply kinks are worked out. Hell yeah. We can be patient in raising rates and allow the labor market to heal. Yep. Let's see here. Very tight. Okay. Betting. My expectation is that jobs growth moves back up closer to higher levels we saw last summer and reopening of the service sector continues. First test will come November 5th with the release of the October jobs numbers. Payrolls are expected to show a 450,000 job gain, bigger than September's 194, but below the 1.03 million monthly average in June and July, according to median forecasts of economists surveyed by Bloomberg. Hidden shift. The risks for Powell is that COVID has wrought more lasting changes to the jobs market than he apparently believes, making it difficult to return to pre-pandemic levels without spurring inflation. Some service sector jobs may be gone forever, from downtown restaurant workers who used to serve fully staffed office buildings to maids in hotels no longer packed with businesses and other travelers. In Nevada, where joblessness is 7.5%, we do know that there are about 50,000 jobs that are just not coming back, says the director of the Department of Employment. Okay. Prompted some Americans to permanently leave the job force. Definitely a lot of retirements, that's for sure. Yeah. Staffing agencies, unemployment is higher based on service industry. Okay, let's see. Worker demands, more money. Okay, interesting. Well, we'll see. We'll see what ends up coming of these labor shortages. And if we end up seeing the labor shortages persist, jobs report this Friday will be a big tell. Do expect the taper to begin at about a $15 billion a month pace. That does put us on a schedule for completing our taper somewhere around the middle of June, July of next year. Lucid doing nice, almost really bouncing off 40 over here. Take a look at this. Let's go to the 30-minute here. Yeah, crossed 40 for a moment here, but really right now has been bouncing off 40 as well. 40 is a rough number for it. Wouldn't be surprised if at the open, potentially, we end up breaking through 40. Matterport as well, by the way. Look at Matterport, up 5.35%. Really nice runs here on Talk of the Metaverse. What's this breaking news? Hold on a second. Let's listen to this for a second.
After the bank was made aware of the results of a probe by UK regulators, the FCA and the PRA, into the way he described his relationship with sex offender Jeffrey Epstein, and the fact that Staley...
well, that guy's gone, but not necessarily the news that we really care about here. So, okay, now, something to... Have I paid off my margin? Are you asking Jerome Powell if debt has been paid off? The answer is a hard no. I printed more. How are all these people surviving with no jobs? Well, here's the thing. You had a lot of two-family households or two-income households, rather, that were both working. And a lot of folks own real estate. A lot of folks have retirement accounts, and there are a lot of folks who are close to retirement that obviously have retirement accounts. The pandemic exploded valuations in both real estate and the stock market, making it easier via the wealth effect for folks to feel like they don't necessarily need to have a dual income household anymore. So it's become easier and more acceptable for a lot of families to say, well, let's just have one less person working, and we'll do something else, study for a new job, start a business, whatever. Business creation, by the way, is up 50% year over year, and even compared to 2019. Well, actually, that is compared to 2019. Compared to 2019, we're creating 50% more businesses every single month than we ever used to create. So business creation is just absolutely booming, and I think the wealth effect has a lot to do with it. So yeah. No, I saw this regarding Squid. Let's do a quick little brief talk about that. So don't sue me, bro, but a few days ago we talked about the Squid Games token. We talked about how it was very almost certainly unaffiliated with Netflix. We talked about the multiple spelling and grammatical errors in their white paper. We also did the math about how disastrously, essentially impossible it would be to get your money out of basically the Squid Game token. And the reason for that was very, very simple. In order for you to make money, the goal of the Squid Games token was for you to play the Squid Game with 456 other players. But in order to play the game, the Squid Game, you would have to pay an entry fee of 456 squid, which at the time of the recording was like $5,300, which is insane. I mean, you would almost need $200,000 to play the game, which is the opposite of being affordable, which was kind of the whole point of the Squid Game, right? Anyway, you would play these rounds and you would have this 1 in 456 chance of winning. And while playing, you would have the opportunity to earn marbles. But marbles were really important because marbles would allow you to sell your Squid token. So let's say you invested $200,000 to play the Squid Game. If you lost, well, your $200,000 is gone because you lost it playing the game. If you won, you would need marbles to get your squid out. But in order to get marbles, you either have to buy them or you have to play the game. But if you play the game, you've got a very large chance of losing. You have a 455 out of 456 chance of losing, right? So if you try to get marbles by playing the game, you're going to lose all your money playing the game because the odds of winning are less than 1%, substantially less than 1%. They're less than 1/4 of 1%. Okay. But marbles have this really weird burn affiliation where essentially, if you wanted to take out, for example, at the time we did the math, if you wanted to take out 10,000, I got a little blur there. If you wanted to take out 10,000 squid at a value of, at the time, like $11 per squid, that's $11,000, you would essentially have had to bought marbles worth about, 20,000 marbles, which would have been a cost of $66,000. So you would have lost another 50% of your money just trying to unlock the ability to sell. I mean, this is like the most horrible kind of cryptocurrency ever, where essentially they trap you into a game where you have less than 1/4 of 1% chance of winning. And if you want to sell, you have to spend a god-awful amount of money just to have the right to sell or play the game where you have a less than 1/4 of 1% chance of winning. And that's in addition to the spelling and grammatical errors, the fact that CoinGecko called them a scam. Everything about the Squid Game token seemed like a complete scam. So this token kept going up and up and up. It would just not stop going up. And it was pretty incredible. And the problem with that, when something keeps going up, is people have this impression that when things go up, that they're safe. And that is wrong. This is something we talk about regularly in the Stocks and Psychology of Money group, that when something goes up, it is not safer, it is riskier. And this is something that's extremely important to pay attention to. When prices go up, risk goes up. And so worth noting that the Squid token here has on CoinMarketCap has had a little bit of a price shift, let's say. So I'm going to go ahead and show the last month here. Actually, let's just go to the last 7 days. It's probably a little bit more relevant. There we go. Okay, so in the last 7 days here, take a look at what's happened to the Squid token. So the Squid token here ran from about 10 cents to $2 to $5 to $11. This is when I made the video calling the Squid token a scam and encouraging people not to invest in it because of how difficult it would be to actually get your money out. Like, even if you did win, you would just be backed into a corner again of trying to actually get your money out, right? Went to $13, $14. Folks, it exploded then. It 3x'd again after I made my video calling it a scam. It 3x'd to $32 this Saturday. And then it kept going and kept going and kept going and kept going. It literally kept going. Look at this. It ran all the way to $38. And then, folks, look at this. It ran up to $89. $89 the Squid token ran to. That's 8 times. That's an 8x return. So had you invested when I called it a scam, it would have gone up another 8x. But then, folks, the reckoning. A 99% decline. Wait, I'm sorry. A 99.99% decline. It is now worth 1/3 of 1 penny. The scam token is no more. Look at this. It ran all the way up to, it actually ran, oh my gosh, $628, $1,700, $2,800. Look at that in a matter of 5 minutes, or that's about 15 minutes here. In a matter of about 15 minutes, it went from $625 to $2,800. And in a matter of about an hour and a half, went from $38 to $2,800. And then basically evaporated. All that money's gone. So whoever created this scam really just made off with, I would say, somewhere around, I mean, it's tough to say. I mean, the 24-hour volume was around 14 mil. You can't really go by the valuation because the valuation implies that they're able to liquidate all of the coins at a certain price, which is obviously not going to happen. But the point is, anybody who put money into this has lost money. So if we look at, gosh, now I feel terrible about it. But if we go back here to, but then again, I don't, because it's kind of like, I mean, the writing was all over the place, right? So, yeah, I mean, you had 24-hour volumes of somewhere around $10 million. Geez, it's difficult to tell how much exact money was thrown into this, but I would venture to say there was probably somewhere between $10 to $50 million thrown into the scam. And anybody who bought into the scam has obviously lost their money. I mean, you were basically throwing money into a Chinese handcuff. And now whoever created this has cashed out. And they can probably retire pretty well here. It'd be very interesting to see where the money ends up going. What ends up happening here with this money. You could see it looks like money is being transferred out of it substantially. Yeah, look at this. 1 minute ago, look at this. Tokens like crazy are being transferred out, would look like out of this address. It's a little difficult to tell here. Now it's been listed as a heist. Ay, ay, ay. Look at that. They've labeled it as a heist. Where a notable amount of ethers or tokens have been stolen. Oh, 40,922 hodlers. So imagine 40,000 people wanting to change their lives with the squid token. And let's say they each put in $15,000. Just as an example. There's no way. That'd be $613 million. Yeah, I mean, oh my gosh. That's certainly much more than I would have anticipated if that was the average amount. But I mean, let's even take a couple. Take a number away here. That's about 61 mil here. If everybody put in $1,500 on average, maybe that's probably more of an expected average, $1,500 or maybe even less. Even $150. The point is, somebody still made off with millions upon millions upon millions of dollars here. Yeah. All right. Well, there it is. All right. That's unfortunate, but that is the result of a pure scam. And it was very, very, I mean, the writing was all over the place. And it's unfortunate to see that. But anyway. Okay. That is the squid token. Buyer beware when you look at potential altcoins. They do not have to be legitimate at all. Anyway, looking at the rest of the market here, we've got Bitcoin 61.8, Ethereum 43.45, Cardano 197, Sheeb at 72, Dogecoin 27. Also have Axie Infinity 137, Tron's about 0.1, Decentraland moving here at about 338. And H-bar sitting at 39. Okay, let's go ahead and see how stocks are doing. Lucid, 6.5%. Good job, Lucid. Wow, 6.5% here. Still knocking on the door of that 40. Matterport, oh my goodness. Another 6% on Matterport. Oh, Lucid just jumped here. Oh, we just updated. 8.1% here on Lucid, sitting right at 40 now. Matterport's actually at 7%. Very nice. Tesla. Tesla sitting at 2.71% at 1144. Oh my goodness. DWAC is down 6.15%. Oh, sorry, those are the warrants. Regular DWAC is down 2.86%. NEO's still down about 3.4% on news of that. Likely on news of that factory, one of the lines shut down. Yeah, it's not so good. They're not navigating the supply crunch anywhere nearly as well as Tesla is. Etsy, 0.12 to the downside. Wayfair appears to be flat. Dave & Buster's relatively flat, but on the green side. Wynn sitting at 90. Let's see. What else do we have? Cloudflare slightly up again, 0.4. Tattooed Chef up 0.45 at 18. PayPal, tiny little green. Gosh, PayPal's really been lagging with the whole Pinterest disaster. Corsair Gaming up 0.65. DraftKings 0.92. Macy's up just over 1%. Tesla sitting at 1145 right now, up 2.8%. And Matterport 7.25%. Not bad. Not bad at all. And Lucid now sitting on $40. Congratulations, Lucid. All right. So let's see what other news we have here. Oh, somebody donated $10. Well, thank you. It kept going after you called it a scam because scammers were burning the coins every time they pulled out liquidity. Probably the marbles, making it harder to get access to those marbles, right? Because the marbles were burned. But the whole thing, like you say, was just a fraud anyway. So, I mean, who knows how the metrics honestly worked in reality. It's a disaster. Very sad. Very, very, very sad. All right. So we're getting ready for the opening bell here. All right. What else do we have? Let's see quickly how the indices are doing as we have about 2 minutes going into the opening bell. Everything's up roughly a quarter. If anything, technology is lagging a little bit today. China developers, dollar bond sales fall to lowest in 18 months. Well, yeah, that makes sense. China's Ganfeng wins deal to supply Tesla with lithium products. Well, good for them. Mystery of who invented Bitcoin hangs over scientist trial. Cool. Coca-Cola's buying the rest of my okay. All right, what else do we have here? What? China locks 34,000 guests inside Disneyland for COVID tests? What? While thousands of visitors to Shanghai Disneyland on Sunday were queuing for roller coasters and watching fireworks above the fairy tale castle, staff quietly sealed the amusement. Are you kidding me? What is this? Oh my gosh, that's like communist. Yeah, I know it's the CCP, okay? Anyway, while thousands of visitors to Shanghai Disneyland on Sunday were queuing for roller coasters, staff quietly sealed the park. People in hazmat suits streamed in through the gates, preparing to test everyone for COVID before they could leave for the day. Nearly 34,000 people at Disneyland underwent testing, which ended close to midnight, long after festivities at the park are usually finished. Ferried home on 220 special buses. All were found Monday to be negative. All. But are still required to isolate at home for 2 days and be retested in 2 weeks. The shutdown of Walt Disney's most lucrative parks came after a positive case of a woman who traveled to Shanghai from near Hangzhou over the weekend. Officials are yet to confirm whether she visited Disney. Her infection sparked an aggressive contact tracing effort across China, which eventually ensnared the park goers and their families and Disneyland staff. Holy moly. Did you imagine that? Ooh, yikes. All right, let's get the bell, folks.
Well, I just forgot. It's Monday, and I had kind of a squid-like weekend, and suddenly here we are.
Well, let's get to work. There's the opening bell and the CNBC real-time exchange at the big board. It's Athena Consumer Acquisition Corp celebrating the listing at the Nasdaq. It's Fluence Energy.
Look at that green. That's about 80% green there in the market. Wow, wow, wow. That is pretty dang green. Ay, ay, ay. Okay, let's go ahead and see how things are performing at the opening bell here, especially Lucid, Tesla, Matterport. Let's take a look at them here. Matterport hanging out at about 6% here, so slightly red there on the opening bell. Does look like we've got Lucid slightly red on the opening bell as well. This is XPeng here, 4.84%. This one's slightly green here on the opener. Toast is going green on the open. Tesla is going green on the open. Look at that. Tesla, 1150. That's an all-time high. Congratulations. 1150 has been hit. We did hit it pre-market. Okay, we hit 1158 in pre-market. But in real-time market time, we have hit 1150 with proper liquidity. That is still something to celebrate. Okay, so good job. Let's see here. Downside, backed holdings down about 8.5. DQ Energy, 3.14 to the downside. AMD, 1.6% to the downside. Zillow, down about 0.96. Neo must be recovering here. It's only down 0.8. Well, yeah, look at that, folks. Neo picking up again. Neo picking up very, very nicely as it's kind of been left behind here from the EV rally. If you look at almost all the other EVs, it's the one that's being left behind. Affirm turning right here at about 160.5, rotating down. Google down about 2/3%. Sheep's sitting just below 73, 74. Owlet, 5%. Matterport back to 7% here. Lucid just fell. Lucid just dumped a little bit here. Look at the attendees being taken here on Lucid, folks. Looks like S&P Dow, by the way, just hit record highs. Snap upgraded to neutral from sell at the Citigroup. Yeah, wow, this is incredible. NASDAQ, 15,521, S&P, 4618, Dow, 35,986, almost at 36,000 on the Dow. Wow. Look at that sell candle there on Lucid, 3880 right now. Matterport, holding on to tendies here, 8.7%. Woo! Let's go. That's really good. Super exciting. So 9% now on Matterport as it moves on excitement over the metaverse. I honestly think, there was somebody who went on this like rant on Twitter about how the metaverse is going to be like this like transcending where the metaverse isn't a place but it's time, and it's like the digital world is going to become more important to us than the physical world. Yeah, no. I ain't there yet, okay? I'm not even remotely close to that. Like, I hear that and I'm like, yeah, baloney. Like, take your baloney and keep going and doing something else and joking somewhere else. But that's not where my head is. My headspace is much more that some of the first sort of virtual reality interactions that I think are actually beneficial that we can make money off of is, let's say you Matterport scan your house right now and you pay me and you're like, hey, Kevin, do a tour of my house, and I put on my goggle or whatever and I can like walk around your house. Like, that would be cool. I can walk around your house and you're like, yeah, I would do that. I would do this. I would do that, or whatever. From an investor point of view, right? I'm not a designer, but from an investor point of view, I think that is a very real, practical application of both sort of the virtual reality world, the metaverse, augmented reality, virtual reality. And I think Matterport's going to be a pioneer in that space, which is very exciting. But in terms of some of this other stuff, I think it's pretty crazy. So okay. Okay, so let's see here. Archimoto up almost 4%. SoFi moving up again. Spotify, Lordstown Motors, all about 3.8% there, including SoFi. Coinbase up about 3%. EXPI 254, very nice. Let's see. Enphase 1.82. Wow, Enphase keeps going here. Very nice. 236 here on Enphase. Geez, almost $100 more than what we paid for it like a month and a bit ago. Affirm down a couple percent. Chillaxing, relaxing a little bit. Neo's back down about 1.4%. Cloudflare actually down 1%, rotating down a bit. Alphabet down 0.72. A little bit of softness coming there into tech. Let's listen into Kramer just for a moment, see what he's got to say.
Kohl's lot was packed.
Was it?
It was packed.
Well, what's on the shelves is also a question.
I don't know.
And then you've also got this issue of, is it worth advertising when you actually don't have any goods to be selling?
Inventory.
And that is an issue that seems to be concerning some as well.
That's actually a good point. Is it worth advertising if you don't have inventory? It's true. You know, you don't want to get customers and they go, oh, just kidding. You know, interesting. All right. So Hut 8 Mining's down fractionally here. All right. Sheeb moving a little bit here. Sheeb just moved a couple percent. Matterport sitting at almost 11% now. That's pretty incredible. Xpeng 5.55. Fisker, Ater, Nikola. You know, it's something when Nikola's up 5%. I wonder what they've been up to, honestly. Tesla chillaxing a little bit there, back to 1134, popping off that 1150 high there. Etsy, 2.61% to the downside. Ouch. Etsy rotating down a little bit here, 244, still pretty incredible. And Affirm sort of spending here, sort of consumer spending down potentially a little bit. Or just sort of the way the sectors are moving here. See Amazon and some of these others rotating down a little bit. Square, payment processing. Okay, let's see what else we have in terms of news. All right, congratulations, Sarah, making 9K on the Matterport opening. That's awesome. All right, Jeffrey Epstein. All right, let's see here. Bank of America to apply to set up brokerage in China. Okay. Okay. Biden spokeswoman diagnosed with COVID after skipping trip. Not sure what that means, after skipping trip. But anyway, Wall Street is amassing a crypto army and paying up for recruits. Okay. Texas abortion law goes before the Supreme Court. That's not a real child right there, in case you're wondering. Okay. Ooh, another stock market melt up has begun. The melt up. Still bitter on Nikola? Well, I didn't lose money on Nikola. I made money on Nikola. But Nikola was a crisis. You know, Nikola was just the definition of, I mean, you could almost go as far as saying fraudulent SPAC. I mean, it was just all drawings and hopium. But then again, maybe that's just what a lot of SPACs are. You know, is there's no business. They go public on vision. Or whatever. That means you can take your billions and take off. Whatever. Is Sheep moving? Let's see here. Yeah. Sheep's moving a little bit here. Yeah. Oh, yeah. Yeah. Look at that. Very nice move here on Sheep. Very good. It's going back to the 5-minute here. Yep. We're breaking out a little bit. Breaking out to the upside here. Let's see if we end up getting to 75 here. But this is kind of what we were expecting, is that we would get some form of a breakout soon. And that's what we're starting to see here. Wow. Okay. So what else? Etsy's down almost 3%. A little bit of a rotation to the downside here. 2% on Affirm. That's holding on. Backed holding almost down 12%. Peloton down 1%. Does anybody have insight into why Peloton would be partnering with what's it called? Why would Peloton be partnering with IMMR? They're a haptics provider for like vibrations and things like that, right? Like things you feel on your phone, sensation. Anyway, why would Peloton be partnering with them? I wonder if it has to do with their new, what's it called? Strength training products. Who knows? I don't know. But very, very interesting. All right. Wow. Matterport now 12.76%. Incredible. I did post a thorough video this morning on Shiba Inu. If you're wondering about some of the rumors, you could see a little breakdown that I did. So watch that video if you haven't yet. Look at this, folks. SoFi up 6.05%, which reminds me, if you want to buy stocks and get up to $70 in totally free stocks, go to metkevin.com/public. Go to metkevin.com/public, get up to $70 in totally free stock. I think they might have even extended that a little bit higher. metkevin.com/public. And yeah, earn free stock. There you go. So check that out. Go to metkevin.com/public. You can earn a free stock. And you can follow me there as well at MeetKevin. All right. What else do we have? So the Russell just turned negative. No, I'm sorry. That's not true. The Russell hasn't updated yet. The Russell's going to update in 3 minutes. Sorry. I thought it was already 6:45. It's not. Okay. Yeah. I'm just looking at the terminal here. See if we got any big movers here in terms of news. No, not necessarily right now. Okay. All right. What else? Let's see if we can get some other news here. Financial Times. All right. Barclays. Okay, we talked about that briefly. We saw that. We saw the Supreme Court. U.S. warehouses running out of space as containers pile high. Now that is interesting. See, remember, folks, we're going into this time where we think it's potentially true that because of all these shortages, that companies are overbuying. Okay, when companies overbuy, they're doing so because they're frustrated of shortages. So they're double and triple ordering what they actually need to make sure they have enough of a stockpile. But that means they have to stockpile it somewhere and store it somewhere and inventory it somewhere, which actually creates inefficiencies because anytime you inventory stuff, you lose stuff, you damage stuff, stuff gets stolen. It's a disaster. Like, get stuff off the shelf. Having stuff on the shelf is very, very, very bad. In business. This is why we like just-in-time inventory, but that whole concept got screwed during these pandemic shortages. But anyway, look at this. Financial Times, U.S. warehouses are running out of space as containers pile high. Let's take a look at this. Containers, this, by the way, could lead to deflationary pressures, right? Containers piled high at the port of New York and Jersey form attention-grabbing views. Okay. The facility is one of okay, whatever. Let's get here to the point. He has a team of employees and real estate agents urgently searching for more space. Rebounding consumer demand has led to record imports through U.S. ports on both coasts and strained every link in the supply chain. After 41 years in the business, this particular person has a unique vantage point over one of the worst of the bottlenecks that executives and economists fear could derail the U.S. recovery. Demand for space and demand for people have been the greatest I have ever seen. Wow, in 41 years. All right. Adding that he has been inundated with calls for new customers, but has had to turn many of them down to prioritize existing customers. And this particular person, again, is a warehousing facility for containers. Imports at the Port of New York and Jersey, the third largest in the country, were 26.4% higher for the year to August than in the same period in 2020. The warehouses where those container loads would normally head first before being distributed are struggling to cope. Nationwide industrial vacancy hit a historic low of 3.6% in the third quarter. You know, I have to say, I would not have expected industrial vacancy to plummet if the pandemic. Okay, ISM manufacturing, by the way, just came in. It looks like it came in at 58.4 versus 59.2. Oh yeah, here we go. It's on CNBC now as well.
We lost ground. The final read will end up 58.4, which happens to be the lightest read of all of 2021. As a matter of fact, to find a
now, this is interesting. The manufacturing index that potentially implies a little. I mean, any number over 50 is still growing, like expansion. But as CNBC just mentioned, one of the lightest reads, which kind of potentially makes sense that you would see some slowdown in the insane ordering that we've been seeing for factories and manufacturers because of so much double and triple pre-ordering that has been done. And that's why we're seeing these insane amounts of storage and storage issues, these shipping constraints, all of this. Take a look at this. Somebody here, Christopher, writes, warehouse problem is driven by the rise of new 3PL like Shipmonk, ShipFusion, and others. They're grabbing all of the near urban warehouses. Well, thank you for that. Thank you for that insight. So anyway, back into this here. According to CBRE, let's see here. Okay, that's the 3.6% industrial vacancy. In the three markets closest to the New Jersey port, combined vacancy rates are just 1.5%. The leap in demand has collided with a sector that has not invested enough to build capacity for moments like this. Warehouse operators say they face shortages of everything they need to run their facilities efficiently, from racks to balers to forklift trucks. This, by the way, sounds bullish for Plug. Plug Power does hydrogen-powered forklifts, by the way, because this equipment is caught in the same shipping delays as other imports. As in many industries, labor shortages are also making the situation worse. According to BLS, the number of warehouse workers increased by only 3% in January and September, a number insufficient to match the surge of goods flowing. In the past, referrals from the employee networks were enough to find new people, but not currently. The effects are being felt. The shortage of space is pushing up the prices tenants pay to store their goods. It used to be common for new warehouses to sit empty for months or years before they found tenants, but now demand is so intense that customers are booking space before buildings are even completed. Warehouse operators said on the latest earnings call that a record 70% of the space it is developing in the U.S. has been pre-leased. That is Prologis, whatever. Anyway, I imagine they're a stock since they had an earnings call. People are in a kind of panic mode when it comes to buying or committing to real estate. It's incredible. Yeah, here's the stock. It's ticker symbol PLD. It's up 24% in the past 6 months, 50% year to date. On the 5-year chart, it's up 192%. My goodness. Some companies with the resources to do so are buying their own warehouses to ensure they're not fighting rivals to secure the capacity they need. According to CoStar, a real estate group, the top 25 retailers acquired almost 38 million of rentable square feet in industrial space, more than double the 2019 figure. Warehouse owners, meanwhile, are accelerating construction plans to catch up with demand. With so few options near ports, some retailers and logistics companies are pushing further inland, redirecting some customers from Los Angeles and Long Beach to Utah and Nevada, where there are millions of square feet of capacity. Well, that makes sense. But problem is you just have to get it there. How are you going to get it there, right? These facilities can be cheaper by a margin of 20 to 35%. But yeah, again, you got to get it there. Instead of spending $800 a container to get it from the port to a nearby warehouse, you might be spending like $3,500 to get it unloaded at a more distant location. No kidding. Jeez, what a mess. This is a problem that is going to be with us for a while. They don't expect this to end until the middle or end of 2023. I actually think it's going to get worse. Yikes. So it's interesting. I mean, again, so many warehousing issues, in my opinion, are just the result of massive pre-ordering, double, triple ordering by Walmart, Target, by other companies to make sure they have enough product. Then they got to sort all the stuff that they bought, which that's going to take a while. They need labor to get through all this product that they just bought. And then they got to sell it. And once this all gets sorted, I think we're just going to be flooded with product. Store shelves are going to be going from bare to overflowing, and it's going to force price cuts. So I do expect to see consumer-based price cuts, substantial consumer-based price cuts next year. We'll see. We'll see individual deflationary pressures. Not everything. I still think wages and rents are going to have substantial inflationary pressures. But this right here, this article from the Financial Times, that is hands down a deflationary concern. You don't have warehouse storage issues and think inflation for very long, in my opinion. Take a look at this. DK just spent $10 to say this. I work in sales for a large switch and router manufacturer. Starts with a C. Couldn't be Cisco. But anyway, you're absolutely right. My clients are putting all their orders in place for 2021 now, only exacerbating the issue. Aye. Well, thank you so much for that insight. All right, let's get back to the sticks. So, right. Etsy down 3.4%. Affirm 5.5% into the toilet right now. Affirm dropping 5.5%. Etsy dropping 3.35%. I think this is on weaker potential consumer spending. Robinhood down 1.4%. Look at this. Alphabet down 1.29%. These are getting worse here, folks. Look at this. Google is rotating straight down here right now. You have Etsy straight down on the day. You've got Fun not having any fun rotating down. You have Affirm. Look at that, straight down with increasing volume, straight down to 152 right here. Yikes. These are some of the largest losers right now in the consumer space. Amazon also rotating down. Apple moving down. This to me shows that this is a lot of pain from the Amazon Apple earnings being delayed from last week to today, really. And it makes sense that Affirm would potentially rotate on that since there's so much excitement over the Affirm Amazon partnership. Slower sales, obviously not so great for Affirm. Matterport chillaxing a little bit after running to 25.43, now sitting at 24.38. Still absolutely incredible, up 8.4% on the day. SoFi up 6.7%. Big moves here on SoFi. XPeng up 5%, EXPI up almost a full 5%. Unreal. Let's see here. Lucid, take a look at that. Lucid only up 3% right now. Also had a little adjustment here to the downside and a consolidation that we're seeing now. GoPro 3%. Enphase, wow, Enphase almost 3%. Enphase doing well. Bounced off 240 over here. Let's see here. Twitter 250, AMC. AMC's up. Look at that. AMC, GameStop about 2.3% each. Lemonade up about 2%. Corsair 2%. Hippo 2%. Tesla sitting at 1.8. Neo went positive. Neo back over $40. Down 4% in the pre-market to positive about 1.5% right now. Pinterest positive. Wow. Let's listen into CNBC for a moment. Let's see what we got going on over here.
Actually did do a little better in the last year.
Okay. Bob, thank you. Bob Bassani. Guys, I want to get to shares of Discovery having what's a rare moment, which is up over 4%. Of course, been following this company closely as it continues to move forward in its deal to merge with the assets of AT&T, essentially Warner Media.
All right. That's not that exciting. All right. Wow. Oh, okay. Let's take a look at yields. How are yields doing? Let's see here. 1.59%. Not a lot of inflation getting priced in there. Looks like Dow Jones up 0.3, S&P 500 off those record highs, 0.08%, NASDAQ up 0.17. Russell's actually up 0.82%. Nice move there on the Russell. Let's look at, let's see, we got SHIB up here. What we're going to look at? I feel like I was going to look at something. Whatever. So what else do we have here? Disney. Disney's up about 1%. And Voyager Digital up 1.94%. You've got Upstart moving again, 4.33%. Ubiquity up about 0.5%. Very nice. Workhorse 3.57. Xpeng 5%. Wow, golly, just some big moves just across the board. 7.6% there on Matterport. Honest Company up 9% here. I wonder if there was news on the Honest Company. Pull that here. HNST. Honest Co. And let's look at the coins as well. Honest. Nope. No particular news there on the Honest Co. 62,000 Bitcoin, Ethereum 4368, Cardano 198, Solana rather 204, SHIB sitting at 73.52, Doge 27. Litecoin 192, Polygon 192, that's Matic. Axie Infinity 137, Filecoin 63, and Decentraland sitting at 321. Very volatile, by the way. Decentraland. Trading a lot between the 35 and 36 spots. All right. What else do we have? Okay, SoFi, 6.32%. Gosh, incredible. 4.61 here on Coinbase. CRISPR, 3. ChargePoint, nice. Okay. Big Digital, really rotating. Big Digital Assets, wow. Rotating down about 8.66%. This one ran like 25%. On Friday, giving back a bit here as traders rotate out. Affirm may have hit an intraday bottom. Look at that bounce here at the bottom. What about SafeMoon? What's so funny? It's not volatile if you don't look. What's SafeMoon doing? I don't know. I haven't looked at SafeMoon. Like, I know there were a lot of people pitching that thing. People are paying money to pitch this thing. No, I don't even know how to. I don't know. It's 51.69 with 1, 2, 3, 4, 5 leading zeros. Huh. Interesting. Anyway, going back over here. Firm. There we go. Back to 5.4% to the downside. What's going on with the SPY? Is the SPY taking a bit of a breather here? Yeah. See, the SPY's rotating down. Schrodinger's stock. Yeah, that's what we should have in our portfolio. It's either alive or dead, or it's both. It's not both alive and dead until it's been observed. 1.63% to the downside. That's a lot for Google. Yeah, this is definitely dragging down the indices here, but also Microsoft down 1.16. Look at that. Amazon down 1.19. The things that are up today are doing well, but there's definitely a current to the downside today. You see that here in Tesla. Tesla's softening, only up 1.19%. I don't think that's the fault of these individual companies. Enphase here softening a little bit. It's really like things are being anchored. Things are being anchored down as other things become deals again. Dutch Bros. Gosh, $80 for Dutch Bros? That's nuts. That's crazy. I mean, that has done phenomenally well. Coinbase sitting at 332, Outlet 503, Plug Power 5%. Go over $40 again here. Incredible. Wow. Lemonade 1.69. Lucid. Wow, Lucid gave up almost its entire gain. This thing was up like 8% pre-market. It gave almost all of it up. Aye. That's crazy. Okay. What else do we have? Yeah, Lemonade's finally up a little bit. Yeah, no kidding. Yeah, but there's definitely some pain coming into the market right now. Definitely see that. Let me see if there's a rationale for this. I'll find out. Steel and freight shifts add to signs of supply chain relief. Steel and aluminum, new deal between the U.S. and the EU on boosting or reducing costs. Mortgages are likely culprit of treasury weaknesses. Okay. All right. What is the breaking news, CNBC?
HQ with breaking news. Construction spending for the month of September expected to be up 0.3% is a miss, down minus 0.5%, down 0.5%. And that is the first negative number and the weakest number since February of this year. Now let's move towards ISM manufacturing for October.
It's possible that the market is chilling out a little bit because of the Fed meeting this week. That's possible. So definitely a possibility here that the market's relaxing because in anticipation of what the Fed's taper will look like and the amount of that Fed taper. Yeah. Okay. So yeah. Anyway, that about does it for Market Open here. Thank you so very much for visiting Dr. Jerome Powell and the pseudonym Meet Kevin. So we'll see you in the next video. Appreciate y'all. Thanks again. And thank you.